Hello and welcome to our investment update for the second quarter of 2021. I'm Dan Kemp and I lead Morningstar's investment team in Europe, the Middle East and Africa. The start of 2021 has been very similar to the end of 2020, with increasing optimism about the recovery in the global economy set against a backdrop of extraordinary government spending and political turmoil. Consequently, the market returns that characterised the end of 2020 have continued into this year. Prices of economically sensitive companies such as energy and financials have risen more strongly than those benefiting from lockdown such as US technology, healthcare and consumer staples. As long-term, value-oriented investors, we have long favoured companies whose share prices were disproportionately discounted during the pandemic as other investors focused on the near-term impact of COVID-19 or had antiquated opinions about the financial stability of these businesses. As other market participants have become more sanguine, our investors have typically benefited from greater gains in the value of their investments. A more positive economic outlook has been accompanied by a rise in the long-term interest rates offered by government bonds and a corresponding fall in the price of those bonds as investors have become concerned about higher inflation that is especially detrimental to fixed income investments. The impact of the sharp falls in bond prices have been muted in our portfolios as we have a lower than usual exposure. This positioning reflected our view that investors were paying too high a price for very low returns. While expected returns have now risen sharply, we are adding exposure only slowly as these bonds continue to offer a return that is significantly lower than that which we would consider to be fair over the long term, and so may be subject to further falls if concerns about inflation persist. Investors who've been with us for some time will remember that this time last year we were focused on planting new assets in the portfolios as the pandemic created many opportunities for long-term growth. While we have already gathered one harvest from the seeds sown last year, there are further harvests to come. An example from this first harvest is high-yield bonds, which were added to portfolios in the second quarter of last year and we've recently been selling. In contrast, European financials continue to develop and are not ready for harvesting yet. Alongside the harvest, we are also finding new opportunities to plant, including Mexican companies in some portfolios. However, we are currently harvesting more than we are planting, indicating that the outlook for investors is not as attractive as it was a year ago. In these situations, the careful management of risk is more important. And hence, we are spending more of our time thinking about the potential challenges ahead than reflecting on the successes of the past. Thank you for watching and goodbye.